Hello. Have you ever, like I have, been fascinated by the yin and yang, the Asian culture and the Western culture and those kind of things? So we have a real treat for you. In this particular episode, we're going to talk to Simon Ray, who is the expert, and he has a term that he calls the Tao of trading. And he's specializing in options. And I really want you to kind of listen a little bit to this, because even though we are real estate investors, there are obviously a bunch of other ways on how you can actually generate cash flow and income. And Simon has a really great way and a great approach that I wasn't aware of, and you might not have either. So let's learn together. Hello and welcome to another episode of the Ideal Investor Show, where we bring you interesting guests. And now that we are in season 2, we also want to touch on two things. That's the one side, the diversity of investing that you all can do. And the other side is, how does it actually relate to cash flow? Because the overall thing that we do at Ideal Wealth Grower, as you know, is try to help people to generate cash flow, or some people call it passive income, so that you can either retire early or retire with more money, or at least have the freedom to do with your time what you want to do. And today we have a great guest. Simon Ray is with us, and he will tell us a little bit about the Tao of trading. Simon, welcome to the show.
Hi, Axel. Thanks for having me.
Yeah, wonderful. And thanks for making the time. Now, Simon, for our audience, can you tell us a little bit, how did you get to the point where you're at now that you have this Tao of trading organization and probably in a prominent role, you wrote the book and so forth? Tell us a little bit, how did you get to that point?
Yeah, sure. So I spent the better part of 25 years in the corporate world working for large investment banks like Goldman Sachs, where I was there for 14 years, spent 6.5 years at Citibank. And I guess I got to middle age and started asking myself, some tough questions. What are you doing with your life? What's your legacy going to be? What footprints are you leaving behind? What is your marginal contribution to society? And I didn't really like the answers I was coming up with, because really what I'd spent most of my corporate career doing was working with people who were already incredibly wealthy and effectively helping really wealthy people stay that way or get even wealthier. And I just felt pretty empty about that. And, I spoke with a couple of mentors and a couple of friends, and I'd realized that I'd built a really good skill set through the functions and the roles that I'd performed at some senior levels in these organizations. And it was really a question of, well, how do I bring that skill set to people who could really benefit from it rather than serving people who are already in the 1%? And so I left the corporate world behind and decided to teach what I know to people who are interested and committed to building their wealth more quickly, and certainly looking to outperform what traditional Wall Street wealth generation methods would allow. And so I wrote a book, built an online education company, which services people from all over the world. And I was able to, marry two passions that I have, one being financial markets and the other being teaching. I've been interested in financial markets ever since I was a teenager. I was in my second last year of high school during the 1987 stock market crash. And I didn't have any money invested at the time. I was too young, but the whole story just kind of captivated me, fascinated me. And I kind of got hooked on stocks and the stock market way back then in high school. And I thought, I want to have a career in the stock market there and then. And then my second passion has been teaching. In addition to being a trader, I'm also a Jeet Kune Do instructor. And I've always found, whether it's Jeet Kune Do, whether it's trading, I've always enjoyed teaching. And some of the most rewarding moments in my life have been helping somebody have that light bulb go off in their head.
Yeah.
The penny drops, they get the aha moment. I find that incredibly gratifying. And so being able to marry, those two passions has been great for me personally as well.
Yeah, that's wonderful. Well, the first thing I want to ask, because I'm asked this all the time, so in this case, I think it makes sense to ask that back. You don't sound like an American of any area that I've been in. So
no, I'm not.
Where's the origin for the accent?
So I was born in England, moved to Australia when I was 13, and I went to a bit of a rough high school and literally had the English accent beaten out of me. So, but I sort of finished high school and university in Perth in Western Australia, and then sort of built my career in Sydney, and moved to Singapore in 2010, which is where I've been ever since.
Yeah, very cool. And Singapore, does that have any kind of its own little twang or twist, or would you say it's just coming together from all kinds of places in the world?
Yeah, Singapore has got a strong local tradition, a strong local accent known as Singlish. It's a very, very distinctive local twang.
Yeah.
But yeah, it's very multicultural as well.
Yeah, that's when I first came to the US with my wife. We called it Denglish, for D for German, and English. And it's literally, in a way, still to this day, every so often you miss a word, which then triggers the brain to switch into the other language. And then for like 3 minutes, we speak German with each other, and then another word, and then we're back in. So we're still in Denglish in a sense.
Interesting.
Okay, cool. Yeah. So the other thing, well, two other things. The first I want to ask is, I think you're the first person, honestly, the first person who said, I was still in high school, I got interested in trading in finance and the stock market. And you said it was a stock market crash. Was it really that literal, or is there maybe something in the Australian school system that is better than everywhere else in the world, with at least something about finance and how to handle money, or how did that happen?
No, I don't think so. I mean, I studied economics as one of my high school examination subjects, and I was lucky enough to have an economics teacher who has written a book, and he was very passionate about not just economics but also finance, and he would come into class in the morning and say, "Oh, do you see the news about the stock market? This is in the aftermath of the crash." So I found that very engaging. I don't know that there was anything particular about the school system. I mean, my school, it churned out its fair number of roof tilers and welders and so forth. We certainly didn't all become investment bankers or anything like that. But yeah, it was just something that I found fascinating. Even as a younger kid, if I was flipping through the newspaper, I'd always turn to the back pages where they had the stock market prices, the tables there, and for no reason that I can really explain, I used to love pouring down them, and I just found it really interesting.
Yeah. Well, I mean, the stories how we can get fascinated or triggered or whatever you want to call it are really individual, I think. So I'm glad to hear that Australian high schools have economics, because that's also not common necessarily all around the world. In my case, just so you know, is my grandpa. Well, for one, I was raised by my grandparents, because both my parents basically had to live the lifestyle that we were living. They both had to go to work, even, in their generation, which at the time was very unusual that both parents would go to work. It was more common that typically the mother stayed home. But my sister's life was basically being dropped off somewhere around 7 a.m. at grandma's. And then they went to work, and somewhere between 5 and 5:30, we were picked up again. And my grandpa was a patent lawyer working for a large corporation, one of the largest of its kind at the time. I don't know if you ever heard about Olympia typewriters. That was pretty much the global leader of typewriters and electronic typewriters. And then when computers came out, they went away. But he worked for them. And when he came home, he had kind of like this habitual thing to come home. My grandma made him a cup of coffee and some little sweet tart thing or stuff like that. And then he took the newspaper, threw like 3/4 of it away, and pulled out the economic section, and then took a pencil and highlighted stuff or underlined stuff. And I must have watched this for years until I finally said, "Hey, Grandpa, what are you doing?" And he was then starting to explain to me what are bonds and what are stocks. Not really that I could comprehend it in any way, but I think that was something that made me interested in money. And in school, just to finish that story, I got fascinated in biology topics. And I think to some extent, after my military career, why did I end up doing a lot of consulting in the pharmaceutical industry is also connected to some teachers, like you said, Simon, who can, some of them, not very many, I believe, but some can transport their topic in a way that it really sticks and, kind of carries on through life in a way. You said earlier, I had some skills that allowed me to do some things in the upper levels of the company that would also transfer to my business. Can you tell the audience a little bit what some of those skills are?
Well, these are skills that were, I guess, honed not less a result of my job and more of a result of my ambition. And it was just my proximity to the markets that enabled me to hone these skills. I'm talking about the ability to identify, analyze, and read trends, the ability to manage financial risk, and the ability to decide, which risks are worth taking. And I think that is such a valuable skill in life. And it's one of the things that people who learn how to trade, they become good at that skill of learning which risks are worth taking. If that's something that you can translate to your everyday life as well, it's a very powerful skill.
Yeah, absolutely. Now, you wrote the book and you call the company or the website the Tao of Trading.
Yeah.
And to me, when I first heard that, when my little elf Nadine said, okay, one of your next shows is going to be with Simon, and she sent me the link to prepare, I'm like, okay, so stock market trading, and on your website, you also talk about options and stuff like that. And I'm like, okay, when I look at what I can find about Tao, without going very deep, admittedly, talks about how the universe works and harmony and kind of philosophical things and so forth. And I always thought this trading stuff, especially in the stock market and option market, is pretty brutal. So can you set my head straight?
Yeah. That's a great question, actually. There's a little bit to unpack there. So why did I write a book on options trading? Is probably a good place to start. I mean, there are already hundreds of books that have been written on options trading. Why does the world need another one? And I thought the world needs a book on options trading that is both simple and engaging, because pretty much all of the other books on options trading are both difficult and frankly quite boring. They're hard to get through. They're the sorts of books you'd only read if you had a boss making you read them. All right. They kind of read like textbooks quite often. So I wanted to write a book that was simple, engaging, fun, easy for people to get through. And from the feedback that I've received from readers, I feel confident I've ticked those two boxes. So many people have written to me and said they've read the book in a weekend. They couldn't put it down. And yeah, it's 342 pages. It's not a booklet. In terms of the name, the Tao of Trading, I mean, the Tao roughly translates to the way. As I said earlier, in addition to being a trader, I'm also a certified Jeet Kune Do instructor. And Jeet Kune Do is the martial art that Bruce Lee developed. And Bruce Lee wrote a wonderful book called The Tao of Jeet Kune Do. It's my favorite book. And so the title of my book, it's an homage to Bruce Lee, who's been a great mentor to me through my life. And the book, the way it's written, it's not just a bunch of trading setups and technical jargon and lingo. It really takes the reader through what it takes to be successful in this game, looking at psychology, mindset, risk management. Yes, we do cover setups and what options are and how to trade them, all the way through to how to actually put it all together and make it happen for you. So it's a holistic book. And yeah, I mean, you're right. The world of trading can be very aggressive, very testosterone-y, very, dog-eat-dog, zero-sum game. I encourage people not to approach trading with that mindset because I just don't think it's particularly helpful. The fact is the financial markets turn over trillions of dollars every day. They are a river of opportunity. And all I'm trying to do as a trader, and all any of us really want to do as traders, is just kind of dip our hands in that river and scoop out a tiny little bit. There's plenty for everyone else. We're just trying to scoop out a little bit from this enormous river of financial abundance that transacts around the world every day.
Yeah, that's very cool. And thanks for explaining that. I mean, certain terms that you use resonate with me partially because of my own studies, but I also always find when you speak a language like we're doing with each other, where it's not my native language, when I had to learn it and was ambitious to learn it as good as possible, there is an extra sensitivity to even normal words. An example being, you just said, in this game. And I wonder, do you use that term in this game consciously in the sense of, I know that some people win and some people lose, or one team wins and when one team wins, the other one loses? Did you mean it consciously like that?
No, it's not as conscious as that. I mean, we kind of refer to trading as a game. There are sort of loosely stipulated rules that some people understand, others don't. But really and truly, I think you could use the word business, industry just as easily.
Yeah, and I didn't mean it in any way as a critique, but for me, sometimes at least for stock and option trading, it feels, because I'm uninformed, obviously, like we mentioned earlier, you're probably fully aware and normally sighted, and I'm the blind, but it feels to me sometimes more like a casino than, something, unless you are really the bank, then it's a little different from that perspective. Now, the other thing is you said, and I don't want to get too philosophical, but one of the things when I did my PhD studies was a really good book talking about whitewater. So would you say the Tao of trading is avoiding the whitewater and working in other parts of the river, or how would you describe it?
I think it's more a case of just being respectful of which way the river is flowing and not trying to row against it.
Not be silent.
Yeah.
Okay. All right, cool. That's good. Now, then we have a little bit of a frame. Can you give us maybe an example for an audience that is not every day teaching or being involved in options trading, how that could look like for somebody? If somebody came to you and say, okay, I have $10,000. Last year wasn't that great. I don't really want to put it in my 401k and let somebody else do with it again. How could you help me to learn what I can do and how I can do it? And besides reading a book, obviously, to do it maybe your way and see if that resonates with me.
So I think getting a quality education in trading, and particularly in options trading, is really, really important. Nobody makes you get a license or pass a test to open an options brokerage account. All right. Now, if you were to jump behind the wheels of a car, having never taken a driving lesson, it might be great fun for the first little while, but it's probably going to result in an accident. And the same is true with options trading. If you open an options trading account without first learning how to trade, it might be good fun for a little while, but it's almost certainly going to end up in an accident. So getting a proper education is really important. I always say to people, read my book. I mean, it costs $8.99. I mean, I make nothing from book sales, all right? It's almost like a try before you buy, or buy. And if you like my style, you like my approach, and you want to take it to the next level, that's when you could look at joining Options Academy, which is my online learning programs. And what we offer is over 25 hours of online tuition. It's broken up over about 70 different videos. So it's all fairly bite-sized chunks. I have had members go through the entire program within a weekend. They are the exception. Most people would take a few weeks to go through it. And once you've been through it probably twice, it's time to start trading. By all means, do some paper trading while you're learning, but you want to start trading real money once you've really digested the information. And what I always say to people is your first 100 trades are really like your apprenticeship, all right? And your goal isn't to make money in your first 100 trades. Your goal is only to not lose money. You want to come out of those first 100 trades and your account should be no smaller than it was when you started. Now, if you make a bit of money, that's fine, but we're not trying to make money. We're trying to refine the process. We're trying to respect the process, practice the process, apply consistency, and just get into the habit of showing up every day and becoming really diligent and treating trading like a job, like a real job. Unfortunately, a lot of people approach trading with this, casino mentality or this lotto ticket mentality, and they feel as though they're going to turn their $1,000 into $1 million in 6 months. And these are the people that end up blowing up their account usually fairly quickly. Whereas if you take a more responsible approach and you say, well, I just over the long term want to grow my wealth or add to my income or do both, as you said at the beginning of your introduction, these are the people with the sort of mindset that will enable success. The thing is with trading, as long as you've got a probabilistic edge, and a probabilistic edge just means you've got a system that puts the probabilities in your favor. If you learn how to not lose money, making money almost becomes inevitable over time once you've honed the practice.
Okay.
And I say to people, once you've gone through your first 100 trades, if you're trading options, you should be targeting returns of around 5% per month. So it's not get rich quick, all right? And it's not passive income, but it's get rich, certainly time efficiently. It does require time, it does require effort, it does require consistency, but we're probably only talking on average half an hour a day or thereabouts. Again, once you've gone through the learning process.
Right. Well, I mean, 5% a month is still 60%, right? So that's pretty steep acceleration. Now, one thing, and maybe I'm naive about that, but to what extent do the underlying assets play a role? Let's say you could say, okay, I do options trading with Procter & Gamble, and in that industry, then I do Pfizer and I don't know, Toyota.
I mean, there are probably there's probably 120 stocks that I would trade on a regular basis, and they tend to be your large, liquid, blue chip, large cap US stocks. That they would mostly all be household names.
Right. So that's what I meant by underlying assets. So to me, we do our work in our investments in real estate, which doesn't mean there's, everybody should have diversification. It's part of why we brought you in. And obviously, if people can live up to that 50 to 60% per year in diligent following half hour a day in that process that you develop, then that accelerates the growth of money, especially if anything that needs to accumulate to become a down payment in our system for a house. But what I was getting at, sometimes you have times like last year where suddenly the world says the growth industry is dead and therefore they're nothing worth anymore. And so let's just kill them by at least 50% or more. Right. And I'm saying it kind of like in this a little bit over the top way, because it felt to me as again, blind, among the one and two eyed, irrational, completely, especially not in the context of, is really everybody in this particular part of the market the same? Or are there some that do better and some that do worse? And then that should actually reflect somehow in both the stock price and probably associated the option contract price. Does that make a difference, or is it really mainly mathematics that are applied?
Well, the way my approach to trading is technical. I'm looking for trends and I'm following price action. I'm never trading what I think should happen. All right. I'm not trading my thoughts and my feelings. I'm trading the chart in front of me. There's a very popular saying, trade what you see, not what you think. A lot of people thought after Russia invaded Ukraine that oil prices should go much, much higher. And oil price basically fell from the week after the invasion until the end of the year. A lot of people thought gold should have gone much, much higher. We had inflation, we had war, we had geopolitical conflict. Gold did nothing last year. A lot of people thought they should buy bonds because bonds perform well in a recession. And the US had a technical recession in the first half. Bonds had basically their worst calendar year on record. All right. So trading narratives and trading what you think should happen can really lead you into a trap. Whereas if you follow price and you learn how to identify trends and identify high probability moments in time to join a trend, you don't have to worry about those stories that you read in the newspaper or see on TV or even the stories going around in your head.
Okay, yeah, that's very good. And I think it's very important. I mean, I know some people, even though I don't understand the underlying thing, but I think one of the things they use is called Fibonacci curves and trend analysis and stuff like that. What has always fascinated me about that is to what extent something like a little bit like the lemmings approach, right? Like if certain people do or certain organizations do certain things, that develops a trend that has a more or less higher or lower probability of continuing to a certain point. Is there something where you would say, okay, if you learn how the math and the technical aspects and trends work, that is what makes it work? I've been meaning to ask somebody who does this kind of stuff, what makes probabilities in the trend analysis actually work? If you say you can almost kind of remove yourself, and I know a German guy who has a financial management company, and he literally almost to the point of preaching says, you have to, like you just said, divorce yourself from what should be, or you love this company and you hate this company. It has all nothing to do with it. We're doing basically in slightly different words what you just said, Simon. Do you have some explanation why the trends work?
Well, let me just start by saying trend following has got 200 years of data backing it up. It is by far the most researched, the most tested style of trading. So it's certainly got the data and the academic rigor to back it up. Trends are one of the most significant anomalies that occur in the financial markets, and it's all based around herd instinct. All right, herding is the old safety in numbers. It's something human beings are just evolutionarily primed to do. We don't like to stand out from the crowd. We feel safety in numbers. And this herding instinct, it occurs in the basal ganglia in the brain. And these instincts occur very much more quickly, and they're very much more powerful than sort of cognitive thought. And that is a large part of the reason why trends form and can become remarkably consistent, because human beings latch onto this herding behavior. And not only that, human beings are hardwired to project the recent past into the future. We always expect the past is going to continue into the
Even
future.
they always put it in the fine print that is supposedly not the case.
Well,
they always.
I mean, it's true that past performance is no guarantee of future performance, but you think about it, right? If you're going to hire somebody for a job, you're going to want to see references and their curriculum vitae, right? Because you're going to assume that what they've done in the past is going to continue on into the future. If you're watching a ball game, a sports game, and Team A has just kicked the last 3 scoring shots in a row, what happens? The commentators start saying things like, Team A has got all of the momentum. Team A looks to have this game in the bag. You can even see the bookmakers shorten the odds on Team A in real time.
No, absolutely.
They stretch their lead.
It even applies. I mean, there are a couple of components, but it even applies on my end with the real estate investing, because it would be really, really inefficient to constantly try to find new providers, right? So you obviously say, okay, I'm looking for good providers when you first start out. Then as you establish good providers, or you might call them good pockets in the market, or whatever you name or label you put on it, and they do what you expect them to do, you stick with them. For one, because they do what they do, but also because it is making it easier, for lack of a better description, to have, like a certain frame into which you can look and see what's actually moving, rather than having kind of like the whole universe to kind of constantly be aware of and try to decipher what's going on. So I get that. Now, that kind of backs a little bit of a question, number 2, actually. 2 questions. The first one is, and you tell me if I'm wrong about this, but over the years, I've heard more and more claims that, especially on the ETF side and the mutual fund side and stuff like that, that even though we're still talking about financial managers and advisors and stuff like that, that a lot of the things are basically programmed into trading programs who just observe movements and then act accordingly. The question that came to my mind when you were describing it is the reason that they're following the trend because they were programmed by the same kind of people who would otherwise have to do it themselves manually?
Well, I mean, at the end of the day, any algo or any trend following system is programmed by humans. So
Right.
They are specifically designed by humans to take advantage of the behavior of other humans effectively.
And do you think there is a chance in the future that machine learning and subsequent AI could overcome that bias?
I think it's unlikely. I don't know if you've used ChatGPT at all. I think we're probably 15 years away from anything seriously impressive on that front, I would think. Look, people have been talking about computers and the bots taking over trading, ever since the tech boom. It certainly hasn't happened. Maybe it will one day. I'll worry about it if and when it does. But, people have been talking about this for more than 2 decades. And trading hasn't gotten any harder. In fact, my trading has improved in that time.
Yeah, I mean, in my recollection over the years, and you said yourself that you've been doing it for quite a while, the introduction and use of any level of automation to me looked very much focused on speed and basically benefit from the tiniest variations, because I have the fiber optic cable that's only like 100 meters long versus like 500 meters long, and that microsecond that I can get to the trade earlier can give me maybe like 1/100th of 1% lower or higher, and I can make money in that margin. That's at least my observation. I'm not an expert, but it seemed like most of the organizations and institutions that wanted to automate things were mainly trying to increase the speed. And I only know this to some extent with the US market, that the regulatory environment is completely nuts in my view about that, right? Because if there were a fee for every trade, like it used to be for you and me when we traded, we used to have to pay a fee, then nobody would do like 100 billion trades in an hour or something like that.
Yeah.
It would be completely prohibitive, the balance between how much you could make and how much it will cost. So for me, this is more a regulatory thing, that, the technology was available, at least to some extent. It's not really so much what do I trade. I think, like you said, the what is being traded is influenced by what people put into the program. The technology aspect is just that a computer can trade faster than a human can type it into some screen or whatever, or into a spreadsheet or what have you. I'm not so sure. I mean, it's very hard to predict where AI goes. I also don't think it's anything to do with ChatGPT, even though I played around with it and I thought it was pretty fascinating. I I think we're right now just in the very early stages of discovering what a computer can learn. And I mean this really in the literal sense of drawing conclusions from a mass of information that are not pre-programmed. I think that's kind of like the step that we are just very slowly starting to make. And I'm actually optimistic to say there might be a lot of questions that we just haven't gotten around to answer because we haven't really looked at all the potential variables. But a computer that has no limitations or almost no limitations on speed can go through all these things in the attempt to learn and discover things that, we would potentially discover ourselves if we had enough time and anywhere nearly the same kind of speed. So, I think the generalized intelligence is at some point maybe coming around. And when that is, then some of those unanswered questions may be answered. Until then, I'm with you. I don't think we have to be too worried. So I think, this is a fascinating field. And before we go to the final few questions, you said, okay, 5% per month after having done the 100 trades and getting familiar and stuff like that. Can you give a little bit for our audience an idea what regular people would put either by percentage or by a nominal number into this kind of activity and how much they can generate in your experience, the members that went through your program?
Yeah, I mean, I usually recommend people start with $5,000. That's, I think, a good starting level to test the waters, but test them properly so that you can make a couple of mistakes. You can have more than one position open. You can have a little bit of diversification in your portfolio. I have had people start with much less than that. I had one lady, Katia, she started with $700 and she turned that into $1,200 in her first month and it has gone on from strength to strength. And she's very grateful because she says inflation is no longer a fear in her life. Our most successful member, Atul, he made 717% last year. And this is where the student becomes the master. I can tell you, I didn't do that well, but it's very gratifying.
Is there a linear relationship between success and time spent?
No, I don't think so. But I think that there would be a loose correlation there.
Okay. So, the number of trades probably makes a little bit of a difference, right?
The number of trades, look, actually, interestingly, Atul, who's our most successful member, he tends to hold positions for longer. So he's actually a little bit less active than I am and most of the other members. So maybe he's onto something there. But look, in terms of number of trades, I would probably do 180 a year, I guess, on average.
Oh, okay.
So reasonably high frequency, not day trading, but I would hold a position.
I was just about to say people would probably assume 10 a day or something, but 180 that's just one every other day, basically. So.
Yeah. And look, I would have more than one on at any one time. I might have up to 10 positions open at a time. Normally it'd be sort of somewhere between 4 and 6. And I would hold a position anywhere from 2 to 3 days to 2 to 3 weeks.
Okay, I was just about to ask how long typically a trade takes. So thanks for answering that. All right, very cool. I think that gives people an idea. And I think it's important. And I was fascinated when we had the chance to invite you to the show that this is one of the areas when, I'm always trying to make the connections to our world. And so if somebody has invested in a property, let's say $150,000 or $200,000 property, and every month after everything is covered, they make $300, right, as cash flow. What we want to get to is that you accumulate besides, I always say pay yourself first, 10% of what comes in, you put into your accumulation account, plus your cash flow from your investments. So let's just say that we're $1,500 a month. You could basically do some of what you're teaching, Simon, and accelerate the growth of that accumulation phase to get to your next down payment, so to speak, for your next investment, right? And kind of combine these things and indirectly, not only learning a new skill, but also have more diversification in the different things that you hold.
Yeah, that would be a great approach. And again, you're using money that is, so to speak, house money. It's money that's come in from your investments.
Exactly.
So it's risk capital. Yeah. So I think
it's also I like the idea more and more in the last few years to say, okay, how can I make that original $1,000 if you want to take that, right? Like, so I made, for some crazy reason, I made 10 grand. I took $1,000, my 10%, and invested them. And now I follow the breadcrumbs. That $1,000 made per month, $2 here. Those $2 went there and made 20 cents here, and then those and so forth, right? So that same original money can get put to work more than once. And that's really where the acceleration comes from, right? Like typically, I think we have a hard time doing this in our mind. We can pretty easily say, okay, I do something, here's the result, end of story. Then I do something else, here's the result. But to have them connected like that, like a waterfall, basically, or an avalanche in a sense, right? Like the first thousand to the snowflake, that ultimately becomes an avalanche. So that's a kind of like a fascinating thing. I'm still looking for somebody who has already made a calculator where you can kind of type that in and see how effective that first $1,000 or first $100 or so actually is. All right, cool. Well, so the Tower of Trading, Simon, before we went to record, you said you prepare something for our audience, and if anybody is interested to get the book, to get the course, or then go to the academy, can you tell us a little bit how they would do that?
Yeah, sure. If they head over to www.toweroftrading, that's TAOOFTRADING.com/ideal, IDEAL. They can download the first chapter of my book for free. They can learn a little bit more about our programs and get a pretty hefty discount as well.
Okay, awesome. Well, and thank you for doing that. So at the end of the show, I always ask the same two questions to everybody. So I'm going to ask them to you too. If you could meet anybody you want, past or present, who would it be and why?
Oh, yeah, easy one for me. It would be Bruce Lee.
Okay.
I think the guy was, not only was he a genius in terms of becoming the father of MMA, but he was a real philosopher as well. He's somebody I'd love to have hung out with.
Okay, yeah, that would be cool. And then the other question is, if you had a time machine, you could go anywhere, forward or backward. Can't change the time-space continuum, though. But other than that, you can go anywhere. Where would you go and why?
Probably go back to 2009 and buy as many Bitcoin as I could.
Yeah, or put like a note into your diary. So by the time you come back and say, buy this weird thing called Bitcoin. Okay, cool. I'm not quite sure if that changes the time-space continuum, but, because you would take some of the 21 million limited number that is out there, but good for you. Yeah, no, that would be cool. I would go with you, and then we can make those entries together. Cool. It was great fun to have you learn a little bit about an area that we are normally not very much involved with, but I think what came across is that, like everything, there is a necessity, I believe, to reach a certain level of mastery before you start risking any kind of assets that you value. And when you're willing to go that route instead of just following the lemmings, when everybody says you have to do something, you're probably too late anyways. So one thing I want to always try to do at the end of the show, any final words, Simon?
I think 2023 is likely to be another challenging year in the stock market. I think we're probably in for another volatile year. I don't know that the markets are going to decline like they did last year, but I certainly think a lot of wide-ranging, volatile, choppy waters out there. It's unlikely to be a very favorable environment for financial assets. So if you are interested in delving into the waters, get a proper education, if not from me, from someone.
Yeah, I think that's great advice. And probably the amount of money to be put at risk using your approach with options is, like you said, people start with several hundred or maybe a few $1,000s is definitely a better, easier way to play, especially when you can do it with money that you don't necessarily need to live for. So thank you, Simon, for being here. It's a great pleasure to have somebody who has spent so much time in these markets, wrote the book and so forth. So I want to recommend everybody go to the website toweroftrading.com/ideal and take a look at the book. And when you like the first chapter, then get the real book.
Awesome, Axel. Thanks very much for having me. It's been a real pleasure.
Thank you. Thanks for listening, and I hope you enjoyed today's episode of the Ideal Investor Show. More info and the links we mentioned during the show are in the show notes, or you can go to our website at idealwealthgrower.com and sign up for the Apple Podcast link. And if you like to talk to me, sign up for a strategy call. Hopefully you want to share what you learned with your network and bring more people in. We are really eager to hear your comments. And until next time, be well, stay safe, and ciao.